Another $43.8 billion in bonds to invest in infrastructure projects. That's part of the 19 policy package outlined by the Chinese State Council on Wednesday, on top of the $43.8 billion announced in June in an effort to further boost its economy. Local governments will also be allocated $73 billion in special bonds for previously unused quota. JP Morgan's chief China economist Haibin believes the newly announced stimulus is crucial for China's economic growth.
Infrastructure investment is very important for this year for two reasons. The first one is to offset the slowdown in the housing market activity, particularly that the housing market activity has been contracting since the second half of this year. And second, that the infrastructure activity this year is different from the past. Actually, it also includes the new infrastructure, i.e. the infrastructure for the new economy, like a 5G and the charging station for new energy cars. So this part is also important for the China's economic transformation, the medium and the longer term growth potential.
Amid an energy crunch triggered by drought and heat wave, support was also directed toward power generation companies, which will be allowed to sell $30 billion of bonds. Zhu Haibin also says the stimulus will help improve the energy structure, adding the impact of the extreme weather on economy is temporary and limited.
Energy shortage right now is very different from the episodes we experienced in the 2020. Particularly for this year, I think it's mainly for the temporary reason, the weather reason. This is very different from 2020. We're talking about the mismatch between the electricity demand and supply. This doesn't exist for this time.